Welcome to today's market report. European stock markets pushed higher on Tuesday, helped by growing French consumer confidence, while fears of a broader fallout from the US hedge fund default eased. DAX in Germany traded 0.7% higher, CAC 40 rose 0.8%, FTSE 100 climbed 0.7%. French consumer confidence rose unexpectedly in March, with the INSEE stats agency saying its monthly consumer sentiment index rose to its highest level since December to reach 94 points from 91 in February. This comes despite new coronavirus restrictions on large parts of the country and the prospect of more curbs on the way, after Finance Minister Bruno Le Maire said all options are on the table to protect the public from rising numbers of infections in a third wave of the COVID-19 virus. The news is more positive in the UK, where the vaccination program has been more successful, as a stay-at-home order and some other lockdown measures have been lifted in England. Prime Minister Boris Johnson still urged the population to be cautious, having warned last week that Europe's wave was likely to wash up on our shores sooner or later. The European market was also helped by a positive handover from Wall Street, with the blue-chip Dow Jones Industrial Average closing Monday at a new record high. Bank tied to the Archegos saga fell, dragging broader financial indices into the red, but losses were limited and eased fears that the issue would become systemic. Back in Europe, Credit Suisse stock rose 1% on Tuesday, rebounding from Monday's sharp losses after it announced a significant hit from Archegos' default of margin calls. AstraZeneca stock fell 0.7% after Canada suspended its COVID vaccine for adults aged 55 and under, as concerns it may be linked to blood clots reared their head again. Food delivery company Deliveroo is likely to price shares in its initial public offering at 390p each, the bottom of the range at which they were marketed, according to Bloomberg, with books closing later on Tuesday. Oil prices edged lower on Tuesday as shipping resumed through the Suez Canal and the focus turned to the meeting of the OPEC Plus later this week. Crude futures traded 0.1% lower at $61.51 per barrel. Brent fell 0.1% to $64.95 per barrel. Gold futures fell 1.1% to $1,696.30 per ounce. On the FX front, the GBP-USD pair maintains a top below a cluster of supports, seen centered on 137.79, including its medium-term uptrend, and economists are looking for further corrective weakness. The intraday downtick was exclusively sponsored by the prevalent strong bullish sentiment surrounding the US dollar. The US dollar prolonged its recent bullish momentum and shot to 4-month tops amid the prospects for a relatively faster US economic recovery from the pandemic. Investors remained optimistic about the outlook for the US economy amid the impressive pace of coronavirus vaccines and the passage of a massive stimulus package. Adding to this, expectations for an additional $3 trillion to $4 trillion infrastructure spending plan from the Biden administration have been fueling the reflation trade. This, along with a sharp spike in the US Treasury bond yields, provided an additional boost to the greenback and exerted some pressure on the GBP-USD pair. That said, a highly successful vaccination distribution program and the easing of some lockdown restrictions in England might extend some support to the British pound. This in turn might help limit the downside for the cable pair, making it prudent to wait for some follow-through selling before placing fresh bearish bets. Looking at the technical picture, acceptance below conference support near mid-137s might have already set the stage for further weakness hence any attempted recovery move might still be seen as a selling opportunity. The GBP-USD pair now seems vulnerable to break below the 137 mark and test a 100-day SMA support near the 136.30 to 136.25 region. Next on tap will be the release of the Conference Board's US Consumer Confidence Index. This, along with the US bond yields, will influence the US dollar price dynamics and produce some short-term trading opportunities around the GBP-USD pair. Euro-dollar intensifies the weekly drop to levels last recorded in November 2020, around 117.30. Sellers remain in control of the price action around the pair for the time being, exposing a deeper pullback to initially the 117 neighborhood in the short-term horizon. The dollar index was up 0.1% at 93.052, a new 4.5-month high. This is today's market news. Thanks for listening. We'll see you next time.